Hello everyone, I'm Giuseppe Basile and I'll be your host for this quick review of 7 markets here. These are the Euro related pairs. I am also known as the FIB Stalker, and you can find my website at www.fibstalkertrading.com. So let's start the Euro dollar here. I suggest you watch also the previous review where I actually reviewed the dollar index, silver, SP 500 and gold, and showed how dollar index and gold are giving hints on what could happen here with the euro as well. So when we look at the chart of the euro, we know that there was a 50% retracement that eventually actually started pushing this price lower. That happened exactly at the beginning of 2014 here, and pushed price into the first target. The reason why this market has moved laterally in the last year and a half here is because the market actually has, and algos and smart money have kept picking profits here around this 109.08. We knew this level well in advance. In fact, we knew this level 1 year before it was hit. We also know that the um, the short, weekly short, I'm not interested at the moment in pushing this price lower. However, uh, the dailies are actually at the moment. So actually, there is no BS because this market at the moment is moving laterally. So bulls are failing to push this price higher, as well as bears are failing to push this price lower, as I'm going to show you in a moment here. Also, when you look at this chart, you see that this market is actually working out the monthly bear money here. So this market will not be capable of rallying until all this overhead resistance here is gone. So this market has been working that in the last few months. We're still not there, and we have to look at this market on a smaller time frame and see whether there are opportunities there. So when we look at this market on the smaller time frame, we can see that there is an area here of longs that has held. That's the area starting at 111.59, and we saw the market dipping into this area and bulls coming once, twice, three, four times at the moment, and 5 times supporting this price. The point is that there's always participation on the short side as well, and as you can see here, um, this market has been in control on the smaller time frame here has been controlled by bulls, and bears, however, are getting more and more control. And in fact, at the moment, this market is moving laterally between 112.45 and 111.59. So if you're short this market, you should keep your short for a retest into 111.60, and this would also be in line with the case that we built for the dollar index as well as silver and gold, and you can review the other video there. So now when we look at the dump money here, clearly there is no edge. Basically, this market here is moving. The weeklies are really not interested. In fact, as we noted before, also the smart money is actually showing a lot of indecision in this market. So really not an interesting market at the moment to trade, at least in my opinion. Moving to the euro versus the pound here. So what we saw in this market recently, we saw a lot of strength in this market, and when we look at the larger time frame here, we know that this market is moving laterally with an upward bias at the moment, uh, and we saw that bulls, weekly and monthly bulls, were not capable of holding this price, and bears were not capable of doing this as well, as we noticed recently. So This market has been moving higher, as you can clearly see, and this market is moving in extensions, and the first target of the extension I played in June here, in end of May and June, it's actually has been clearly participated here. It's pushing price higher. The first target has been hit, and the second target is very close here. So once that happens, any retrace of this market, and notice that this second high is also aligned with relative highs here that we saw back in 2013 around the 087.40. So it's very probable that this market, once it hits that second target, is going to retrace. And when it is going to retrace, well, if the retrace happens, soon after testing the level, then what I'm going to anticipate is a retrace here, which would be even reasonably steep into 084.34, which would be 300 pips here, maybe in a few weeks. And so when we look at the dump money here, as you can see, dump money has been supporting smart money in pushing this price higher. However, when this market will come back, it could actually come back into that area that is bought, controlled by smart money, as well as dump money here, which is the other starting at 084.34, as I mentioned before. When we look at the daily, there's not really a lot to do here. This market is continuing higher, and it has been supported by supported recently by the dump money here. So until we see that high at second target hit. Now the second target is not an opportunity or an occasion to sell because this market could continue higher as well. We use the second target. We use targets to take profits, not to sell. Okay, so that's absolutely not recommended if that's what you want to do. So I would just wait in this market and see for opportunities to take a little piece of this move lower. This market is going to find a lot of support when it comes back. And so the opportunity for shorts are very tiny here, so be careful shorting this market. When we look at the euro versus the Swiss franc here, we know that this market after this huge choke and move not-wise from the Swiss bank here, we saw this market actually participating at the 1084. So this market has been pretty technical, and after that move came back to a very technical behavior. And in fact, recently the day of the Brexit was an occasion for this market to actually trade into the next measure move, as you can see here, which has been respected. And this market technically on the weekly time frame is pushing higher. And if that's the case, it's gonna hit 114.33 at some point. Okay, so that's the technical case for when we only consider the smart money. When you consider that money, though, we also know that this market, the reason why this market is having difficulty in pushing out is because there is this large dump, monthly dump money area here, which prevents this market to move high. But if this market moves lower here due to that, there's going to be this 110.14, which will still be potentially acting as an area of support. Okay, so there was support before, and the second tests are always dangerous tests, but there's no reason to believe that at this point that the market could not follow up. When we look at the Swiss franc on the daily time frame, obviously we clearly see this lateral move due to that participation on short side from that money. So there is really not a lot we can say here. We know that there's a potential 50% here from this wick that came from the low on the 24th. This was the day after the decision Brexit vote, And as you can see, these levels are respected very well and very often to the pip. And so the daily here, it's apparently is pushing higher into previous size of 110.04. So if you are long this market, as there is a lot of indecision from the player, this market could well go move higher into 109.99 and potentially even higher into the first target. Moving to the euro versus Australian dollar, this market is technical as well on the larger time. In fact, this market is actually, when you look at the very large from a on the high on the highest time frame here, we see that there was participation 163.40 area, sorry, 30 area here once, and that's enough to keep pushing price lower. And that participation should bring price at least into the technical continuation area, the 140.69, if not lower, because this area would be against the main trend, which is lower at the moment. And recently we also saw confirmed participation on the weekly, so we have participation from the monthly, we also have participation short from weeklies here. And as you can clearly see here, initially bears were not capable of pushing this price lower, but eventually they took control, and they did it at 154.69, the market just continued lower here. And recently on the weekly as well as daily, there was 3 weeks ago here a confirmation. Price came again into the 50%, and it's now pushing into what? It's pushing into right into that 140.69. So if you're short this market already, you should stay short and try to trade this market into the 140.99. That's where we're going to see, likely going to see this market moving. When we look at the daily time frame here, we see recent participation. The last that was Thursday last week. So there was Friday last week. And we saw participation on the short side, and this basically a continuation of that trade that we actually saw. So can you see smart money is always more precise in identifying area of potential reversal, and I have a technique called flip stalking timing that can be used to procedurally test this area. So I never sell blindly in this areas. I need to see confirmation, and I have a technique that allows me to do that in a very procedural way. So emotions are off the table here. I mean, process can be very much it's very much procedural. Okay, so Euro Canadian dollar. The Euro Canadian dollar has a similar chart here, although has been more bullish, and at the moment is moving laterally. In fact, the weekly time frame shows here that bears were not interested in pushing this price lower, or at least not where typically that participation come. And then bulls also were very undecided on the larger time frame. So we see two weak market, the euro and the Canadian economies, two weak economies, and obviously the players are also very cautious here. And this market is range bound, as you can clearly see. You could make the case that recently the shorts have very recently have took control here on the larger time frame, and there is the possibility for this market to be pushed down into 138.53. So the Canadian dollar could actually have the upper end in the coming weeks and months on the euro if this continues. Now, we always want to see also how that money is positioned, and so far has been supporting this price, but as soon as that 144.37 fails, we might see a quick move in this market. Also have to be careful here because the daily are being supported at the moment, and daily longs have been supported, and we also have a 50% retrace here. This has been tested twice, 146.26, and retested very recently here. However, this value area here, long daily value area long, is actually losing its support here, and this market could actually move lower as well. We have bear shorts here on the daily as well, which are going to push this price below this area of support from smart and that money. So this market, if it gets below 146.68, actually continue lower, and there's a possibility to see this market much lower here. This market is trading in an extension short at the moment, and it's likely to be trading a level that is identified by one of these lows here, which would give quite a sizable target if this market was to continue lower here. As you can see, it is 138. You should not be surprised that that 138 actually coincides with the level that we identified on the weekly, because all algorithms all work together on larger as well as smaller time frame, even much smaller time frame than this. So for our hourly, 5 minutes, and even the 1 minute time frame. Continuing here on the euro versus New Zealand dollar, pretty interesting market here, and we saw on the very large time frame here. Let's remove the trend following that money model here. We are seeing this market. We saw this market trading the 50% and 171.93. Price got into that first target, so you should not be surprised if you see this reaction there. There was profit taking, and again, when the market went into that area again, there was a profit taking. But this market has all the potential to continue to 141.54. So this was recently this market gave a very good opportunity to get involved. As you can see, the dump money here has actually picked up this money, kept pushing lower, and we will see what kind of reaction you get at again at 151, 152 here, where there is potential for another profit taking. As you can see here, every time this market has reached this area, there was profit taking event, and we're going to see whether this area of profit taking is going to hold, or this market is going to just continue lower here. So the opportunity was here. In these videos, I do not review the smaller time frame, and the smaller time frame also give the opportunity, the stop loss, and a full trading plan and partial profit as well. So if you're interested, just drop me an email and I'll give you more details as well. So this market is actually dropping down here. It's failing this area, and it actually continue lower. It failed this area here, and it's just moving lower, and it might continue lower here. So any retraces might be opportunity to sell this market. All right, so last market here is the euro versus Japanese yen, and this market is a very similar situation here. We saw this market actually. I followed this market a lot on the last few years as well. So we actually saw one of the patterns, EURCAD patterns, taking place here after a failure, and then the pattern played nicely here. No. So again, what you see here is a market that continued lower below that first target, and then the profit taking came at the second target, and should not be surprised that this market is very technical and is actually respecting the rules by the book. And in fact, the next move lower came just at that 117.95, 118, where there was also participation from the down money, and this was good for a quick trade here. So if this market is going to continue higher here, I think the bears will have another stab at short at 117.95. That's if this market continue higher. The daily here is suggesting something like that. As you can see, it is few days higher. However, this is going to bring price into again an area of potential short here. So I'm glad to see this market moving higher, because it's moving into a potential area where we can look for shorts again, and that's what we want to do in this market. Anyway, be careful shorting. It's not time yet to short this market. And on the larger time frame here, as I mentioned, the 1795 has got participation. It is an extension that has the potential to bring this price to 99.40. So that would be a long-term trade, of course. That could take 1 year or so to develop. So it's something that anyway you want to keep in the back of your mind. So thanks a lot for watching this review, which is a little bit longer here because I've touched on 7 different markets. If you want more information, you can reach me at fipstalkertrading.com, and or FX Street. You can look for my name, Giuseppe Basile, and thanks a lot for watching. Bye bye now.